We also got to talk about ARM this morning. They're gearing up for the biggest initial public offering of the year by pitching potential shareholders on a bigger business here. The chipmaker CEO told investors that the company made a significant shift in their strategy. According to a video seen by Bloomberg, ARM's main focus has long been on designing chips for electronics, then selling that tech to companies like Qualcomm. Now ARM is reportedly focusing on more specific products in key growth areas, really addressing more specific and urgent needs across cloud computing and car electronics. The company is seeking as much as $54.5 billion at tomorrow's IPO. And what that should signal to many people out there and investors for this company that has a 10-time oversubscribed IPO already is that they're going to be really focusing in on where those large B2B purchases are at right now. Because if you were to think about what their revenue model was previously, and the best breakdown that I've seen is that previously it was about licensing chip designs, charging a blueprint fee, and then additionally adding on a royalty over the top of that. So now what this signals is that they're really looking more at a royalty that is set based on the device average selling price instead of the chip average selling price that they were previously enacting their model around.
Yeah, and that's so critical, right? Especially when you have a lofty valuation like this, you need to figure out how to raise the royalties. We know ARM has started to do this, so the capability here for the company to continue to do that going forward, obviously very critical here for the business story. When you take a look at this valuation, though, it started the week seeking $54.5 billion in the IPO. But like you said, Brad, the oversubscribed here, popularity of this IPO, at least right now, according to Bloomberg, like you said, over 10 times subscribed. Bankers apparently planning to close the book by this afternoon. They're saying it actually could end up as much as 15 times oversubscribed by tomorrow. So ARM really trying to make the investor case here for the company, why it could potentially maybe even be valued beyond that $54.5 billion, which they initially started the week looking at. Whether or not that comes to fruition, we are going to see. But they're trying to say that, hey, this is a lot more than just smartphones, right? We talk about the fact that the car technology, what it could do for the Internet of Things, the ability here to charge more in royalties, and exactly what that's going to do for their business. ARM at least using that argument. We'll see, though, whether or not they're able to, I guess, get that message out beyond just the street.
I would say that this is a much safer environment for them to enter into the markets and here's why. Because you're not getting caught up purely within that AI hype phase and then setting yourself up for potential failure, at least on the sentiment side for investors and the expectations that would be lofty had they come out, say, earlier this year in Q1 or Q2. And so now that some of that dust has settled and it's turned into a show me story, they can clearly articulate their narrative, their story to the street, and let the chips fall where they may. But as of right now, it seems like those chips are stacked pretty high, at least by some of those investors looking to get in on this IPO as well.
Yeah, certainly. And so much also riding on it, just exactly what this debut is going to mean for the broader IPO market. We certainly have not seen a heck of a lot of activity since the start of the year, coming off a very dismal 2022. So if we see a strong debut here from ARM, followed by potentially another strong debut here from Instacart, maybe we will start to see a little bit more activity within the IPO space before the end of the year.